Hello everyone, Michael here. Welcome to day 11. I'm just going to warn you guys, I want you guys to bear with me. This video is going to be a little bit difficult for me because what I'm going to talk about is something I'm still in the process of learning myself. So I won't even act like I'm the greatest teacher at it. I'm going to go through just the basic concepts of this theory. And then, as I learn more about it too and implement it and see more examples of it, then I can do another video in the future. I do understand the basic concept and the theory behind it and the cycles that the market goes through. But there are some really intricate parts of it that I'm still in the process of learning myself. So the video is going to be about Wyckoff price cycles, basically the 4 cycles. Wyckoff was some individual long ago that came up with this theory that the market goes through cycles, goes through 4 different cycles, and it just repeats itself over and over and over. And from what I've seen, I believe it to be true. The trick is trying to figure out when certain parts of the cycles are happening, ending, when the next part's starting. So there are 4 cycles to it. As you can see here, it starts with an accumulation phase. This is usually sideways action. They call it accumulation or ranging. Prices in a range. Then we go into a markup uptrend. You can call it an uptrend as well. Then we go into a distribution phase. So this kind of goes along with our support and resistance thing that we were talking about. Accumulation would be demand, would be that buyers are filling up their orders, sending price up. We get up to a distribution phase, which is a supply zone where sellers are selling off, sending price back down. And these are the 4 cycles in the market. And then within these, the accumulation and the distribution phase are called ranges. So you can trade inside those ranges too. And that's what I'm still learning about myself. And I don't want to start trying to talk about it and, just not be very detailed about it. So I am still learning about ranges, where the top of the range is, where the bottom of the range is, and so forth. But just the concept of these 4 cycles is something that we can go ahead and talk about. So you guys can look for them on the chart yourself, and try to figure out, hey, are we in an accumulation phase? Or we're obviously in an uptrend now, or we're in a downtrend now. Where does the distribution start? Where does the accumulation start? So just keeping this kind of image in your head, you can start to see this on charts, and I'll show you some examples of where this took place. So like I said, there's 4 cycles. We'll start with the accumulation. Accumulation starts after a downtrend. So we have price coming down in a downtrend, and then it kind of stops and starts this sideways action where we just kind of sit here and bounce around back and forth. We have the top, it's a range. We have the top of the range, we have the bottom of the range. Sometimes we might even have fake out, which they call a spring move, I think is what it's called. And this is basically sellers or buyers filling up their buy orders. And you'll see usually during this time that volume starts to increase, especially towards the end of it. A lot more people are joining in or coming into the accumulation phase, increasing volume before we finally break out. So accumulation, I'm going to read this off. Individual accumulation is basically the increase of a position over a certain individual accumulation. So this would be like us individually. We would be in an accumulation phase if we were increasing our position over a certain amount of time, meaning anyone who is slowly increasing their position over a designated period of time is taking part in the accumulation process. Accumulation on a macro level can be easily spotted on any chart while price is at a key support. So the bottom of this range would be a key support, and price is moving in a sideways pattern showing strong amounts of buying action. So we have the sideways action, we're in accumulation before we break out and start the uptrend or the mark up. And like I said, the next part of it would be the uptrend, the mark up, where we start to make higher highs and higher lows before we finally reach an area where we would then range. We would finally, come down, come up, and then we would start to go sideways. And then this would be called the distribution phase before starting to trend down. And then it repeats itself and we start to go sideways again. And this is the four cycles of this market. And then within these ranges, there's also like 4 different phases too. So that's what I'm still learning about, and I don't want to get into a whole lot right now. So we start with the accumulation, then we go to an uptrend. The next cycle is called the distribution phase, or supply. This would be a supply zone. So we had our trend going up, then we started to range, we started to trend sideways. Shorters are coming in, sellers are coming in, and then and these sideways actions can even be in different chart patterns. Maybe the range starts to look like a descending triangle. That could be a distribution phase before breaking down, and then maybe we get down to our accumulation phase and it ranges for a little bit. I'm going to draw it down here. Let's say we're ranging for a little bit like this, going up and down, and then we start this ascending triangle where we do this in our accumulation, and then our distribution could look like a descending triangle. And then we would have our uptrend here and then our downtrend here. So I have some notes here on this one as well. Let's see what they say. Distribution in its most basic form is pretty much the same as accumulation, but instead of taking place at key support, we instead see it taking place at key resistance. Exactly the same style of pattern, price at a key resistance and moving sideways, but this time people on a wider scale are selling their positions slowly over a period of time. So this would be the distribution phase, and then the last phase would be the downtrend, where we make lower lows and lower highs. And then this cycle just repeats itself over and over and over in any market. There's not as many examples in Bitcoin because, a couple years ago we went through this massive uptrend, where we went all the way up to 20K. There are some more recent ones, but that massive jump from, when we were at $1,000 up to 20,000 happened so rapidly that you could say that was our massive uptrend before starting the accumulation, or before starting the distribution phase or supply zone. So I got another picture of it you can look at here. So look how price came down and our downtrend, started our accumulation. Spring failed breakout, failed continuation. So it failed to continue down. It broke out of the range, failed to continue, came back up into the range. And there's a lot to these ranges too. There's a lot that I'm still learning about, that I'm really getting closer to, ready to share with you guys, because it's really interesting to learn about how to trade these ranges. And there's a lot of people, I know some people that trade literally level by level, range by range, accumulation, distribution, and they'll trade these. That's what they do. They trade these ranges, these distribution ranges, these accumulation ranges, and do quite well at it. So it failed to break out spring, bounced back up into the range, and then started our uptrend. And in the uptrend, we'll see other patterns. We'll see like a bull flag, like this area right here could be a bull flag. Before entering the distribution phase, it failed to break out, failed to continue the uptrend, came back down to the range, and then came back down to the distribution area, the supply zone, and then we started our downtrend, and then we form another range over and over and over. So I'm going to go to a website here with some information on it, and I'll share this website too so you guys can read about this. It kind of illustrates it as well. Where do I want to look at? So there are a couple laws, 3 laws to this as well. The law of supply and demand determines the price direction. When demand is greater than supply, price rises. When supply is greater than demand, price falls. The trader can study and the balance between supply and demand by comparing volume, our volume bars on our chart. Then there's the law of cause and effect and the law of effort. So I'll share this link with you. There's a lot more in here too. Here's the stuff about ranges. So there's phase A, B, C, D, E. And this looks probably really crazy, but these are patterns that we see a lot. So this could be right here. This would be our accumulation phase. It gives you another example. And then here it would be our distribution phase. But there's a lot so within these accumulation and distribution phases, there's a lot to these ranges, where the top of the range is, where the bottom of the range is, and so forth, and really trying to figure out when it's going to break out of this. So there is a lot to this. I'll share this link with you guys, and you guys can look through here. And when I get a better grasp on it, I will do a video about it myself. So let's go over to the Bitcoin chart. I do have some pulled up here. And we'll just go back to the first ones. So our massive uptrend, I'm not going to go prior to that because we just, it's hard to really see this pattern happening back here. But we see our uptrend, and we entered what you could call our distribution phase. We had the spring area that failed to continue higher, came back down into our range before breaking out and continuing lower. And like I said, that part of the downtrend, or even in the distribution phase, we see there's patterns in this as well. So we have our descending triangle that's continuing down, and we enter this range of accumulation. We've had our spring, our fake out. We failed to continue lower. We started our accumulation phase, bouncing around inside of this range. Started making lower lows, and then finally broke out to the upside. Our uptrend now, continuing our uptrend, before we entered now another distribution phase. Failed to break out a couple times, failed to continue our uptrend. Started to range, started to bounce around in here, started to almost form another descending triangle from here to here with our bottom of the triangle down here. And then we broke down, and then these ones get a little bit smaller, and these are going to happen on any time frame. You could go to the 5 minute and see the same thing. It's going to happen on all the time frames. It's just going to happen more quickly on smaller time frames. So we broke out of that distribution phase, that supply zone, and entered into another range here. Bounced around in this range, failed to break out and continue, and then we rose up a quick uptrend. I'm on the 4 hour. If it went down to the 30 minute, then this would probably be a little bit more choppy, laddered up. Came back up into another range. Now we formed another distribution range. We have our little spring fake out, couldn't continue the trend, came back twice, came back down inside of the range, and continued to move sideways before breaking down. And we started a new accumulation phase. Broke out here, broke out here. A lot of sellers probably tried to come in, thought we were going to continue down. Boom, their stop losses were hit. Traded in this range, went sideways for a while before then starting our uptrend. And this is back in February now. So we started our uptrend, and we now got into like the climax where we reached the top of the uptrend. It tried to spring out, didn't have enough buyers coming in to continue the uptrend. We started to trade sideways, trend again, before now breaking down. So we can see this, on the 4 hour chart. We could say that this was probably an accumulation phase, and where we enter that distribution phase, I'm not even sure yet. So you guys can go down to lower time frames and take a look at this, but this is just the general concept, the general idea of And I'm going to zoom out so you can see it just a little bit better. The 4 cycles of the market: the downtrend, accumulation, uptrend, distribution, downtrend, accumulation, uptrend, distribution, downtrend, accumulation, uptrend, distribution, downtrend. We may even be in a larger accumulation phase. This whole area could be accumulation phase, especially if we started to come back down, you know, to the 6K range. This top here and this bottom here, we could say would be our accumulation area. And, you know, right before the halvening could send price up. So I'm going to put this link in here. You guys can read more about it. I just wanted to go over the basic concepts of it. I'm going to learn more about the the ranges and how to trade in these ranges, because a couple of the people that I follow, kind of like my mentors, you could say, do trade a lot just in these different ranges, and have good ideas of when price is going to break out of them, or not even necessarily trade the breakout, whether it be break up from the accumulation or break down from the distribution, but trade while we're in this range from the top to the bottom, top to the bottom. And then when the breakout starts, they'll stop trading and wait for the next range to start. So yeah, if you guys have any questions, let me know. I'll post the link, and hopefully I can get a video up soon about the ranges, because that is something I want to get more into and get a better grasp on. So I will talk to you guys later.